Let's talk about something we all feel these days, the absolute chaos of the financial world. Well, today, we're going to look for an antidote. We're going to find it by studying two of the world's most stable economies to uncover a blueprint for what you could call a 100-year strategy for wealth. I mean, does this feel familiar to you? You've got crypto shooting to the moon one day and then crashing back to Earth the next. The stock market feels less like investing and more like a casino. And then there's that little voice in your head, right? The one that's always whispering, don't miss out, get in now. It's this exhausting cycle of greed and fear. But what if there's a better way? What if you could just step off that roller coaster entirely? Well, you can. And to figure out how, we're going to look at two of the calmest places on the financial map, the fjords of Norway and the mountains of Switzerland. See, these countries are playing a totally different game. They're on a different timeline. They've built these incredible financial fortresses, not on a hunch or a hot tip, but on a 100-year strategy, a mindset that's built for their grandkids, not just the next earnings report. And this right here, this lays it all out, doesn't it? On the left, that's the world we live in every single day. The constant speculation, the panic selling, the greed, the fear. But on the right, that's the goal. That's the foundation of a 100-year strategy. Patience, discipline, trust, and real security. It's a massive shift, right? Moving from just reacting to all the noise to actually intentionally building something that's going to last. So let's start with our first mentor and see how they did it. We're kicking things off with Norway, a country that absolutely mastered the art of patience. They turned what could have been a short-term party into a legacy that will last for centuries. So get this. Back in the 60s, they discover massive amounts of oil in the North Sea. Now, the temptation to just spend that money must have been enormous, right? I mean, most countries would have. But Norway's leaders did something pretty radical. They made this profound choice. They stood up and basically said, this incredible wealth, it isn't for us. This is a gift for the generations that haven't even been born yet. So instead of consuming it, they decided to save and grow it. And the results of that one powerful decision, this, a fund now worth over $1.6 trillion. To put that in perspective, that's about $300,000 for every man, woman, and child in Norway. This fund is so huge, it owns roughly 1.5% of every single publicly traded company on the planet. I mean, that is the incredible, almost unbelievable power of patience and long-term thinking. Okay, so you're probably wondering, how in the world do they manage it all? Well, the really cool part is how they do it. There's no frantic trading floor. It's run by algorithms, and they stick to this super strict, diversified formula. About 70% in stocks for growth, 25% in bonds for that stability, and 5% in real assets. By literally programming human emotion out of the equation, the panic to sell when things dip, or the greed to pile in at the peak, they built a system that is unbelievably resilient. So when you boil it all down, what can we really take away from Norway? It's basically two simple but incredibly powerful lessons. First, prioritize building for tomorrow over just spending for today. And second, build a system for your investing that can't be hijacked by the emotional roller coaster of the markets. So how do you actually apply this? Well, you can think about starting your own personal wealth fund by setting up an automated, consistent investment, let's say 20% of your income, but any amount is a start, into broad, low-cost funds like ETFs. You're basically copying the Norwegian model. You're paying your future self first, and you're letting cold, hard discipline, not your feelings, drive your growth. Okay, so that's the Norwegian playbook for patient growth. Now let's turn to our second mentor, Switzerland. Because if Norway teaches us how to grow wealth, Switzerland teaches us how to fiercely protect it. Their entire financial philosophy is built on three pillars: security, quality, and trust. You've probably heard the term safe haven when people talk about the Swiss franc. Well, it's not just a saying, it's legendary for a reason. During times of global crisis, when everyone else is hitting the panic button, money floods into Switzerland for safety. Just look at 2008. While the rest of the financial world was literally collapsing, the Swiss franc actually got stronger by 20%. It's a financial bunker in the middle of a hurricane. And this chart, wow, this shows their secret weapon. They wage a relentless war on inflation. The Swiss National Bank is famously disciplined. Their number one priority is a stable currency, not chasing quick artificial growth. And the result? Over the last 50 years, their average inflation has been less than 1%. Meanwhile, most other major economies have watched their money's value get eaten away by over 3% year after year. The Swiss are absolute masters of preservation. So the lessons from the Swiss are crystal clear. First, you have to defend your purchasing power at all costs. Think of inflation as a silent tax that just robs your savings. Second, focus on uncompromising quality. I mean, from their watches to their pharmaceuticals, the Swiss economy is built on making things that are essential and built to last, not just cheap and disposable. It's all about creating value that endures. So how do you put this into practice? You add a layer of Swiss-style defense to your own strategy. By allocating a part of your portfolio, again, let's say 20%, to safe haven assets, you're building a crucial buffer. This could be things like physical gold and silver, or even financial tools that track the Swiss franc. Just think of it as your portfolio's personal bodyguard. Okay, so we've got Norway's engine for growth, and we've got Switzerland's armor for protection. Now it's time to bring them together into one powerful strategy we can call the Fjord&Franc synthesis. But before we get to the how, we have to understand the core mindset shift. It really all boils down to this one idea called time preference. And it's a choice every single one of us faces. Do you want that instant thrill of a short-term win right now? Or do you want the deep, unshakable peace of mind that comes from building real 100-year security? As we've seen, Norway and Switzerland, they chose peace. So building your own personal fortress, it actually comes down to these three simple steps. Number one, grow like Norway. Dedicate a slice of your portfolio to diversified global growth assets. Number two, protect like Switzerland. Dedicate another slice to stable defensive assets. And number three, and this is honestly the most important one, execute with cold, robotic discipline. Automate everything and then learn to ignore all the noise. You know, this isn't just a financial strategy. It's a personal journey. It's about making a conscious decision to walk away from a life of financial fear and constant anxiety and moving toward a future that's defined by calm, control, and a really profound peace of mind. In the end, it all comes down to this simple, powerful truth. Real wealth isn't about the frantic chase for the next big score. It's measured by building a fortress so strong that you actually get to keep and grow what you have, not just for you, but for generations to come. So the final question to ask yourself is, are you building for the next minute or are you building for the next century?